Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic start to your week. In today's video, we are taking a look at the recent short-term price action for Bitcoin, as well as diving deep into the high time frame charts, the recent weekly candle close, the total cryptocurrency market cap, and the total altcoin market. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contact me by clicking the admin name, check out our trading track record, or watch a 10-minute video to show you inside the channel. With that being said, let's jump into the content. So as we can see here guys, on the short term, Bitcoin has had a fair amount of sideways chop moving into the weekly close. Thankfully, we were able to sustain above that 200 moving average and thus sustain that weekly close above the weekly range high, potentially, at least for this week, avoiding this deviation setup from actually confirming, and that was really the setup we were really most concerned about for a steeper correction. So we've actually avoided this, which is a fantastic sign for now. We'll come back and discuss this in a second. On the short term, we can see Bitcoin is still chopping between that 200 moving average and of course that next level of resistance, which is the change of character, which extends up to around 106.9 to 107,000. We're going to be discussing this in today's video. We can also see on the total altcoin market cap, the altcoin market cap, upon breaking down from that baseline of the Ichimoku cloud, as we said, if it did, we would see a large correction. We had seen that correction now play out, dropping all the way down exactly to the 200 moving average as anticipated, and we have now seen a nice bounce from the 200. So we're discussing in today's video what the altcoin market is likely to do now, what our key levels are, and our overall directional bias for altcoins again in the video today. And of course, also with the total cryptocurrency market cap now breaking down from the uptrend and now also finding support at that 3.19 trillion, we'll also be discussing that. So we've got a lot to cover today. Let's start on the market data. 24-hour volume and 24-hour liquidations. Let's dive on in. Volume is up 33%, 213 billion. Liquidations up 11%, so really not too much happening here on the short term. Volume is quite low. Liquidations are equally as low at 77 million in longs, 107 million in shorts. Again, this consolidation, this sideways chop is not really ideal conditions for a large amount of volume to flow into the market. Let's go ahead now and take a look at our upcoming economic news. So on the forecast for the rest of this month, we do have some pretty big news events coming out. Primarily, we do have, of course, our NFP data, and of course our unemployment rate data. Now this is coming out in a few days on the 6th of June, so we're paying very close attention to that as it is leading for inflation. And then of course we have got our inflation data on the 11th. We do have to pay very close attention to that. Moving down through the rest of the month, we don't have much more until the 19th, which is then going to be our interest rate decision. So again, another major event happening later in this month, that interest rate decision, which as we know is going to really shake things up for the direction of the market. Hopefully we get an interest rate cut. If we do, we are expecting the market to continue its macro uptrend. Now in other news, we can also see the SEC reviews ETFs filings, declares native staking as not a security. This is very recent news, which can lay the foundation for potentially staking occurring for Ethereum. And as we mentioned already, policy does stipulate demand, so that could be a catalyst to drive the prices up for the rest of the market, something to also pay attention to as we move into interest rate decisions. Let's go ahead, guys, now and jump into the S&P 500 and DXY. The DXY, as we mentioned, not too much happening here. We are still expecting that macro downward trajectory to take place over the next 6 to 12 months. We are looking for 93 to 94. And again, if we do see this general downward trajectory, which will be bolstered by interest rate reductions, we will likely see the rest of the cryptocurrency and asset market continue upwards. That is definitely something we have to pay attention to. And the aggression of that downtrend will be determined by how aggressive those interest rates do drop and when they do drop. So we have to pay attention to that as well. The S&P 500 overall, like we said already, it is in a macro uptrend. There's no doubt about that. However, the one level we need to break through now to see the move into a new all-time high is going to be that $6,000 level. So it's most recent local high. If we break through here, we are likely moving up to 6,000 US dollars. If we break through 6,000, we're likely moving past 6,000 into a new all-time high, so 6,200, etc., etc. Now, we have got until we break below our 5,700 level to do this, meaning we can chop around for quite some time. That is perfectly fine. It is only if we lose 5,700 do we then see a higher time frame downtrend. So until then, the expectation is that eventually we will move into this new all-time high, provided 5,700 sustains. So the bias is still going to be leaning bearish. That is it, guys. Let's jump into the Bitcoin analysis. Before we do, make sure to sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support the content, support the channel, and of course, support yourself in your trading journey. Go ahead and check them out. We'll play an ad and we'll get right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, guys, let's go ahead and jump back in. Now, I do want to mention that this campaign at the moment, we are giving away over 80,000 US dollars, even a trip to Dubai, fully paid for, and an iPhone, an Apple Watch, a MacBook. All you need to do is check that post out in our Telegram channel. You can check it out on the Telegram channel to find out more information. So definitely check that out to win some very, very large rewards. Let's jump into the analysis today. So starting on the total cryptocurrency and total altcoin market cap, and actually, I want to start on the total altcoin market cap this time around. So taking a look at the total altcoin market cap, we can see we broke below that baseline of the Ichimoku cloud, which we said if we were to break down, we would likely see the next leg down for the altcoin market to really kick off. And we did see that. We saw this correction, this large one red daily candle spanning around about 5% toward the downside, dropping most altcoins around 5, 15, some even 20% toward the downside. Now, since we have seen that correction, we have managed to bounce from the 200 moving average and the prior level of major resistance spanning between 840 billion and that $825 billion level. So we're going to go ahead and get rid of this gray box here so we can see this one a little clearly, which is going to be our high time frame support. Now, this is a very important level of support we are sitting on. This is a 200, and these are, of course, our prior lower highs. This is the level of which when we broke through, we saw this aggressive uptrend start. We've pushed into resistance and we've come back down now to retest this as support. This is the overall expectation for altcoins. It is expected the majority of altcoins are close to the bottom of their moves, if not already bottomed on their moves, provided the total altcoin market cap is able to sustain above this level of support, meaning the expectation is that we travel back toward the upside, provided this 200 moving average sustains. So the overall directional bias for altcoins should be a little bit more skewed toward the upside over here, as the risk return is more in favor of that upward direction in comparison to that downward direction. If we do see the price cross that 200, the risk we've taken for these high time frame swings are very, very small in comparison. And of course, we can also cut those positions, entering short positions if that level is broken. Because if we do lose that 200 moving average and we do drop below these prior higher lows, we would expect the price to drop toward the downside quite aggressively. So if we're looking at the altcoin market, this is really the last line of support. And it is a major reversal point for the altcoin market, which needs to sustain. So watching very closely for the altcoin market going forward over the next few weeks. We are expecting reversals to occur back to 940 if this level sustains. And if we're looking for that quote unquote parabolic move for the altcoin market, we are only expecting that to occur if the altcoin market breaks 940 billion. So we could see chop continue for quite some time, but it's only upon the break of 940 billion would we see that large rally, which will result in, we're looking 30 to 50% gains for the majority of altcoins in the market. Now again, that will only sustain and occur above 940 billion. Until then, we will see chop between the 200 and this major level of resistance. That is the altcoin analysis, guys. Let's jump over to the rest of the analysis. We're jumping into the total market cap now. So the total cryptocurrency market cap, as you know, it broke down from this major diagonal uptrend. Now, the risk of the breakdown was one, a loss of the major diagonal uptrend increased the likelihood that Bitcoin would, of course, break below its 50-day long uptrend, which we did see the breakdown of occur, and thus continue to the 200 moving average. Thankfully, we did not lose the 200 moving average. In fact, we were able to sustain above the 200 moving average and avoided the weekly close below the weekly range high, thus avoiding this to be a deviation setup. So this has really saved us quite some headache over here for Bitcoin. And of course, the total altcoin market cap was able to total cryptocurrency market cap was able to bounce from that $319 trillion level. Of course, this is the prior range high of this prior consolidation. With this prior consolidation between 3.19 trillion and 3.06 trillion prior to that aggressive downtrend starting, we came back up and we're able to bounce from this level. So we've got that 50 EMA pushing up into support, and we've got the 3.19 trillion. So if we're looking at the expectations for the total cryptocurrency market, the expectation is again still going to be high time frame bullish, provided we remain above that 3.19 and the 50 EMA. So provided we sustain above this orange line I've drawn in, the expectations for the broader cryptocurrency market for Bitcoin and for altcoins, the trajectory is still expected to be upward. If we lose this low, then we expect corrections to 3 trillion. If we see the correction to 3 trillion, that is what would bring Bitcoin lower into that sub $100,000 level, and of course, confirm that deviation move. So at the moment, we are still safe. We are still safe. The risk is still there, but it is still very much safe. It is still very much in a overall directional trend toward the upside. That is it for the total cryptocurrency market cap, guys. Again, provided we sustain above that level we've just identified, the expectations are we move into these prior highs. So paying close attention to all of that. Let's move over to the weekly chart. So this is where it gets very interesting. The weekly chart, we had a lot of warning signs show up last week. And now, although those warning signs didn't develop into bearish setups, they are still kind of lingering on the chart. So we're going to take a look at this in today's video, and we're going to be discussing the significance of these potential warning signs still, and what the short term will need to do to validate or invalidate these warning signs. If we're looking at the weekly candle close, and a lot of you probably watched yesterday's video, you would know the weekly candle close here has occurred above the weekly range high, which is a very good sign. It means that, number one, we did not follow the 2021 pattern to the exact T, because in the 2021 pattern, what we saw was we saw a bearish divergence, and we saw on the weekly candle, okay, that printed the divergence, we not only saw it engulf the candle, But we saw the deviation setup validate, meaning the weekly close occurred underneath the prior weekly high. That is something we were really concerned about, not because it would create a macro top, but it would create a high time frame reversal point. And whether or not that reversal point would lead to a macro downtrend or not is up to question, but it would create a point of which the expectations are heavily skewed toward the downside, which could facilitate that downward move to 98, potentially 96,000. So it has avoided that temporarily. Now, the reason I say it has avoided it temporarily is because although we have sustained above this weekly level, we did still print a bearish engulfing candle. And of course, on the short term, we are still in this downtrend underneath some key horizontal levels of resistance. So we're not quite out of the woods yet to then expect a direct continuation upwards. The risk of this candle bleeding out and then dropping back down is still very, very much real. Let's talk about now the impact of that, and let's talk about what the short term will need to do to actually avoid this downward move and trigger our upward continuation. So jumping to the short term. As we can see here, guys, on the short term, we have got two very important levels. We've got the 200 moving average, represented by the blue line, okay? And we have got the change of character level, which is a prior level of support, now a level of resistance. This is what we are expecting. If we fail to break through this resistance, we will expect the price to push back down through the 200 moving average and thus complete that deviation setup on the weekly and trigger the correction to sub $100,000. That is worst case scenario. If we are able to break through this resistance, we do have positive momentum. The probability that we continue back to 110 is significantly greater, thus flipping this level into resistance into a new area of support, increasing the likelihood of a continuation, as this current candle will be able to exceed the opening price of that prior green candle, essentially kind of invalidating the potential, or should I say decreasing the likelihood that this bearish engulfing candle would actually lead to a continued downtrend. So when we're looking at the short term, that is what needs to happen. And when we're looking at the overall trend of the price action, we are still in this trajectory, this overall downward trajectory as represented by this downtrend. So breaking into that 110 level would also break this diagonal level. So a few things need to happen for the bulls to really push the price into the next leg up. And again, the next leg up would be a move into like 115, 120,000, provided we break through these respective levels. We'll be looking 115, we'll be looking 120, and of course that would be a brand new all-time high for Bitcoin. So as we sit above prior range highs, there's always going to be the risk that we suffer deviation and we see these corrections. The question really is now, is there enough demand coming in at these prices to not only absorb the selling and taking profits that's occurring at these highs, but of course, as a result, avoid that exhaustion really taking over and pushing the price down? And the answer to that right now is we simply do not know while the price is between our bearish and bullish trigger points. We have not pushed up and yet over here to show any signs on the charts that the buyers are fully in control, and we've not pushed down enough yet here on the short term either to trigger what it would take for the sellers to initiate that next leg down. So we're very much now in a wait and see position for the price action while we sit between these two levels. Very much playing it cautiously and very much waiting to see, like I said, how we react to these levels. But the higher time frame charts, again, are still in a very significant position. The risk of downward correction is still there, and the potential for a new all-time high is still there, provided Bitcoin can actually break through the levels of which we have discussed. So again, on the short term, I'll summarize it. While Bitcoin remains under our change of character at 106.9 to 106.4, we have to expect the potential for corrections back under the 200 moving average. If we break through that level of resistance, the next key points we're watching is the overall downtrend and the 110 level. Breaking the downtrend will very likely result in a new all-time high, as the warning signs on the weekly, which are still present and have not been invalidated, will, as a consequence, be more unlikely to play out and develop. Until that happens, this alone, this one weekly candle above the range high, is not enough to say we are going to immediately continue upwards, and therefore the warning signs and risks that we do come down are still valid and are still in play. So overall, guys, the high time frame charts are still in an uptrend. There's no doubt about that. We are above some very important levels, which we need to sustain. We can see some new policies shaping up to potentially act as a catalyst to push altcoins and Ethereum up. But we need to be aware that the risk of these high time frame corrections, if all of this goes downward, is still very much there, and we cannot ignore that. So thank you for tuning in and have a fantastic day. And I'll catch you guys in our next video on Thursday. Love to see you then. Bye.